Everybody, this is Jim at SP500chart.com. It's about 4:15 on August 6th, 2013, and we're going to take a look, as we always do, at the S&P 500 chart. Boy, this has been a tough stretch over the past couple of weeks, trying to get a feel for where the market wants to go. There are signs of bullishness. Then there's signs that we're just running out of steam. But we're going to take a look and do the best we can. Sometimes that's all you can do. Before we do so, I want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I'm just a guy that draws lines on charts. I think part of the confusion has been the fact that we just have not been seeing clear patterns, and when we find something that looks like, ooh, that looks like it may complete and do something, the market just has its own ideas. For example, there was a point in time at which I thought we might be looking at a little head and shoulders top right here, left shoulder, head, right, no, not a right shoulder, okay? So that's one instance where we kind of got thrown for a loop. Then I was thinking, well, you know the story, because I've talked about it a number of times. Maybe we're going to get a head and shoulders continuation, inverted head and shoulders, left shoulder, head, nope, no right shoulder. And all of that casts doubt upon what is actually going on. And I think it shows in the fact that the market seems to really not know what it wants to do. Now, we've drawn a couple of trend lines. We had this line at 1698, and I think that's a good line to keep on the chart, because today, even though that line was taken out, it did so in a manner that lends credence to the validity of this line representing some kind of resistance or support barrier, depending upon whether we are currently above or below it. So since we are now below it, you can see, if we look at a 5-minute chart, that once the S&P broke down immediately out of this little rising channel. I mean, right off the bat, I was saying I thought we would have an update today based upon where we were in relation to this channel, but the channel broke right at the get-go. So no luck there. And makes me look bad, but hey, it won't be the first time. So we break down through this. We get a little bit of a bounce at 1698-ish, 1699, wherever this line exactly is. You could see it wanted to, it looked like it wanted to do a little bouncing around there. Then it broke through it. Then we spent the rest of the day really kind of trying to rally back, but frankly to no avail, and we close underneath that, what I think is an important level. Now, the trading that took place from about, I don't know, when would this be here on the chart, 11 o'clock, 10:40, 10:30, whatever, to just after lunch, sort of looked like a bear flag. It's kind of a small one, and we broke down through that shortly after lunch. And I'm at this point expecting famous last words, but I'm going to say it. I would expect some more downside here, but I don't think the rug is really going to get pulled out from under the market, because I think there's still reasons technical and psychological to expect this market to set some new highs. So it's just an interesting thing that's going on. Let me show you one more thing. I mentioned yesterday that we had a couple of trend lines that were at the same pitch as this long-term support line that broke back in early June. I mentioned that I thought it was very interesting that this line and this line are at the exact same pitch as that one. Now I want to show you one more thing that's kind of interesting, and this is going to balance out the idea potentially of the downside risk here. If I make another parallel of that, all of a sudden it looks like we have support at this line. So even though we've got this little bear flag here that broke down today, I'm curious to see if we get a bounce on this line. And if we do, will we get back over that 1698? Because if we do that, this really, the action today could end up playing more as a back test of this, even though we're underneath it, but more of a back test of this neckline area with a little additional to potentially make up for the loss or the lack of having a right shoulder over here. So in other words, if we have a left shoulder head and a right shoulder, that right shoulder is the process of just getting rid of a little bit more inventory, if you will, of shares, so that when you get a breakout, the breakout is sustainable. We didn't have that. So maybe, just a thought, we get back under this line just for a bit to make up for the lack of having a right shoulder in this pattern. If we do if we do take this this line out tomorrow, then I think this 1680-ish line is in pretty clear play. So guys, that's about I think that's about the chart for right now. By the way, I had one person mention in the forum that this looked like that all of this could end up being an ascending wedge, and I kind of see what we're talking about there, because if you extend this line back here, you get another touch here, and then if you draw a second line across the last two peaks, that is a possibility. But I would like to see a little bit more. You would expect to see a little bit more going on inside this pattern than just 1, 2, 3, 4 trips from the top to the bottom. I would expect at least 5 and 6 and maybe 7 and 8. And just to throw a monkey wrench at you, sometimes you have a wedge pattern that is really setting up more of a move. Well, what's a good way to put it? Sometimes you have a wedge pattern that ends up redefining itself as a channel when that top line gets broken out over the top of. So we'll know if we get another move up to this gray line right here, and then we get turned back again. At that point, I would say that, yeah, that would be looking suspiciously like a wedge that could be giving us an indication of a downturn. But keep in mind, these wedge patterns usually don't form at a major top. Usually wedges just kind of form in a very short-term manner, and that's usually not the way a bull market ends. Bull markets usually end with a decently sized head and shoulders top, a decently sized what's the word I'm looking for? It vanished. A decently sized broadening top, something that's got more going on than just a relatively small wedge. Though this wedge still could be a possibility. So let's just kind of keep our eyes on that going forward. And thanks for bringing that to my attention. So for tomorrow, coming into the market, let's see if this line holds, or let's see if this 1698 area can get attacked again and potentially get taken out. Again, all of this was looking pretty good about the inverted head and shoulders thing. We just got a premature breakout. And frankly, the same thing goes for this right here too. It's like we're just not allowing these patterns to mature to the point to where they can carry out what they typically would carry out. So guys, there's your video for August 6, 2013. I'm about ready to throw my hands up and just say, okay, I'm going to take a couple days off because this is getting a little screwy. But you know, if it gets screwy, it is. And I would rather look at it and say, this looks screwy to me, than to say, oh, I know exactly what's going on. Or to just throw up my hands and say, forget it. I'm just going to keep my mouth shut until there's something worth talking about. No, I owe it to you to do this daily look at the market, and let's see if we get some clarity, and let's see how those newly defined lines might work out tomorrow and for the rest of this week. Thanks for watching.